The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. I am here at 877-927-6648, and I'm going to have a lightning round. I said to the den inside there, I'll have a lightning round, and we've got a bunch of people, and we will go to those questions on the stocks that they have in a moment. Let me just run through a couple of things. Yesterday's move down was a tidal change. What do I mean by that? There are certain stocks in certain sectors that got clobbered over the last couple of days. It was just the clincher. And for me, I am looking at some of these stocks as possibly making hat-trick tops. A hat-trick top is just something you do not want to mess around with. It means there is a chance that these great performers are finally making monthly peaks in the ChapmanWave that are peaks of consequence. So let me do this. I'm going to take a moment here. I think it'll be a good idea to do this. So we've got a question in the den about gold. I'll go one at a time. So we've got Joe. Joe wanted gold. So we've got Joe Gold. We've got Kip wants Cymi, C-Y-M-I, that's Cymer Inc., leading laser light source systems, had a fantastic move, made a new all-time high just 3 days ago. Then we got UWM, Lucky wants Lucky. So UWM, we've got that. All right. Okay, we got those for now. Let me go through what I'm looking at here. So I had to write those down because, by the time I get to look down at my resource sheet, I'm liable to be anywhere in the world. Just I go all over the show. Where's the Dow? The Dow is hitting the 200-period exponential moving average. What does that mean? It means from the peak F top that it made in the ChapmanWave, the sixth highest peak at 13,661 on the 5th of October, it's gone down in 1, 2, 3 troughs. That's 3 little V shapes to the bottom, lower lows. And the target that I had was a left side, right side price time match of the low of, I believe it was, let me just go to my white chart if you don't mind for a second. This is what my subscribers get every single day, and just a comprehensive look. I don't know if there's a more comprehensive look at the markets than what I do. It is so thorough in terms of the ChapmanWave, that is. Look, there's a left side, right side price time match. If you're looking at Tiger TV, whoops, I always forget to put my cell phone on so I can see the charts. They made slight color changes here. If you look at this dashed line, that red line there, it's what I call the ChapmanWave inside wedge. What does that mean? It's a particular technique that I teach in my webinars, one of coming up December the 6th and 7th, a 2-day webinar, all-day webinar, where I explain how you can make a left side, right side price time match. That's the horizontal move from 12,977 in the Dow. That was the low of the 4th of September. And that should have come out to 3 days ago, the 5th of November, and in fact it came 2 days later. Well, out of, so that's at about 36 bars, we've missed by 2. And what happens is plunges down, and then you've got the inside track. This is that dashed line, that horizontal line that's coming in, a diagonal line, and that says it takes you to the Dow in the next left side, right side price time match of 12,778 from the 2nd of June to where? And I teach this technique, and we go in great detail in this technique. I do it in my CD introducing the ChapmanWave methodology as well, which is what you'll get as a bonus. That'll take you to the 15th of November. When is the 15th of November? A week's time. So that says the the inside bar that I told subscribers, I wrote it down. As mentioned for a few days now, it is not the election results that matter to the market, but the market's response. And that was some response. Whew. Fortunately, at least for the Dow, longs are still profitable. Now, let's see if today our longs are still profitable, and our shorts are working very nicely. And all of the shorts dropped sharply. Look at the left side, right side, price time match, and the ChapmanWave inside wedge target line pointing to the 12,770s. First, a pop is possible to 13,050s. Well, today, the only thing we could do is go to 12,980. Days young, but let me tell you something. After a 300 and something point smash to the downside yesterday, so far, I'm saying this to the market loud and clear so that those lowercase t, lowercase g trading gods are listening. Ha! You were only able to bounce a little today after such a big move? Maybe that'll spur them on. And I'll tell you why. Because in my work, there's something that I developed. It's called the ChapmanWave Trin Indicator. Actually, all it is Richard Arm's Trin Index, which I have used. I don't even know how long I've been using it for. Years and years. I probably read in great detail Richard Arm's thesis on how he developed the arms indicator. I've heard him talk about it. I can only tell you one thing. I use it in a completely different way. It just evolved. I didn't go for that. I just found over a period of time what I was looking at was completely different to what he was looking at. Hey, he might be, it might work great for him in his methodology. I don't care. I have a methodology and it says, in this particular case, because of the rise into the 2.78 area yesterday, that within 1 to 2 days, there should be an intraday bounce of at least 7 to maybe even 9 S&P points. It could come from a low, it could come from a high, doesn't matter. We're using up day 1. Tomorrow will be day 2. I can only tell you this. This particular indicator has such an it has probably one of the best records of any technical indicator that I know of. I don't really want to go through it. I know that it is because I know how many times it's missed, which is like 2 or 3 times. Let's say it's 5 times in the last year. Look at this. If I pull this back, look how many times it's been 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 40, 41, 42, 49, 50, 51, about 55 times. So if it's missed maybe 3 times out of the 55, hey, I'd say that's a pretty damn good percentage, right? So it says that if it misses this particular time, and I say this particular time, why? By any other level of measuring, the market is oversold. Technically, it should bounce. If it cannot use that spark to ignite a rally, it's like wheel slipping. It's like starting your car, like the snow we have and the ice out there. The wheels spin. You put the gas, the revs say 3,000, 4,000, 5,000, and you're going nowhere. That's basically what will happen. That'll be very negative. It'll say, we will slide down, not we. The Dow will slide down to the 12,778 level really quickly if it can't have at least a decent bounce today. And look, there's a decent trend line in both the Dow and the S&P if you're looking at these charts in Tiger TV. Now, the other thing is that the volatility index has only made a U-shaped pattern. That U-shaped pattern should have, with what we've seen, with Dow going to lower lows, it hasn't gone to higher highs above 19.65 in the volatility index. So all of a sudden, and you've got the ChapmanWave falling axe pattern, that's that declining cone that you break above it. It says, you're now free to go and test the top. And the top went to 19.40 yesterday. Big deal. It hasn't got to the 20s. What is it saying? It's saying either the market is ignoring this, whoa, don't ever ignore an indicator like this, or it's saying, you know what? There is still enough internal strength to have a pretty decent rally to get rid of this excess optimism that's still out there, if there is. So all I can say to you is the VIX goes back into the 1960 area, touches 20s, this market goes plop. There's no rally, it just goes plop. If in fact it holds here, and in fact the trend, the VIX starts to move below 18, it's at 18.38 now, that'll say, hey, you know what? we're going to have these lower highs and lower lows and lower highs and lower lows for a while. Now, when I talk about a hat-trick top, I'm talking about fantastic stocks like a WFM, which is Whole Foods, which I believe, I spoke about this on air about 2 months ago. I said, you know what, I think I'm getting a hat-trick top in Whole Foods. It made a peak F in the ChapmanWave. It was going into leg F. It makes a peak F if this month, November, there's no new high. I can call it an instant restart to a leg F/B. At this point, I have to stay with the F for the moment. Why? Because the MACD is turning around and the stochastic's turning around, but they're still very good, and I have to give it the benefit of the doubt. The moment it goes 1 penny above 101.87, I say, I was wrong. It's going to extend higher as the 9-period exponential moving average becomes great support. Look at the weekly chart. Look at the technicals. This is saying, this is a peak F. So I've got a potential hat-trick top with a peak F monthly, a peak F, 6 highest peak in the ChapmanWave, a weekly, and then the daily is in a leg F, goes to peak F at 101.86, and it looks like it's going to hit the 89.11 area very soon. It's at 91.87. Wow, it's down 4. Oh, that was the one that I was just dying to short, and I missed it. Well, that's what happens. So, okay, with that said, let's just go quickly through let's go through the market. Dow's down 32 at 12,900. The S&P is down at this particular point. It's only down 368, but as I said, after a move like yesterday, it's not only down 368, it is down more. It's down 368 today, down 4 since yesterday's big smash to the downside. Comp index is down 8 to 29.28. Gold, now gold, I'm sorry, I don't see anything in gold. I think gold is going down as well. So gold's at GLD is at 166.36, down 13 cents. Gold's unshot 17.14. Silver is up a tad at it's up 21 cents at 31.88. And now this is the interesting thing. High-grade copper is doing, high-grade copper to me is really important. Before I get rid of this chart, because this is what you can see if you're looking at Tiger TV, the Dow is sitting on the 200-period exponential moving average. If it starts to close underneath the 12,850 area, right now it's at 12,901, I'd be very concerned because it's breaking what is actually key support, just a trend line, just a simple, I teach these trend lines. I teach you how to look at these trend lines. I teach you how to use these things. Look at this. This goes red, and it suddenly goes green. What does that mean? Well, that means it's a technique that I've developed called the inside track. And the inside track says, wow, this is the perfect time to be buying the Dow because it's sitting on the 200-period exponential moving average. It is also inside that track that is normally great support in the bounce-off area, except that the MACD is still negative and the stochastic, which is really important, is turning down. So I would say I'd risk a pop to the upside if I wanted to pop a trade. A quick trade, that's one thing. But I'd be real careful. I'll tell you why. Because if it breaks underneath 12,800, it breaks that support line. And then there's no support for quite a while. All right, I'll be back, and we're going to do the lightning round. Basil Chapman, 877-927-6648. And then we'll go also to Mike in New York.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and the Dow is down 35, S&P's down 4, and I forgot to mention the TLT is, in fact, minus 0.5 at 123.95. Remember I said about 123.85 is really what I want to see. Well, we got that yesterday. It's leg D, probably peak D if there's no new high today. Watching this real closely because the dollar is also in leg D. So this is that moment of inflection where it's either deflection or inflection, where these prices either continue in this leg immediately or they deflect and go lower from potential Ds or resistance points. And we're watching the same thing in the market itself. Now, we've got Mike online. We've got Mike from New York. You wanted to look at
Starbucks, if you could tell me what you think of the chart there.
Well, this is a very interesting thing because I don't know if they've gone into the wines I think that they were going to go into, but there's no question that the CEO is one of the most innovative CEOs. I mean, I wouldn't call him the Steve Jobs of the coffee cafes, but he's certainly an incredibly innovative guy. I've got a peak F top, which actually looks very much like the gold chart. Let me do this. Here's the gold chart. I bet if I put that up and I show SBUX, and I didn't mention the names, sometimes I like to cover up the titles of the charts. In fact, I've done it for years. I do that for my subscribers when I show a chart, it's often the Dow chart, in a blank form, and then I turn it upside down and say, what do you think? Well, this is the same sort of thing. Now look at this. It's UWN. UWM. Okay, sorry. In the den, I wrote it incorrectly. UWM. Oh, that's what I wrote. I said it incorrectly. So Starbucks hit a round number 62. You remember how important I spoke about the round numbers, how important they are in my work when you're getting to a potential top, because it says that's like a secret code. It's like what I've always called a silent signal. It's a silent doji or a silent round number, and it can happen in various ways. And I teach that when I teach about whether it happens on the bar, in the bar, the day before, or the bar before, or the bar after. And in this particular case, it happened in the monthly chart. The very bar of leg F turned into a peak F at 62.00. My guess is, and I'm looking at things and I'm saying to myself, geez, I don't want to be a Grinch, but everything I'm looking at says that this particular holiday season could turn out to be a really disappointing one for retailers. And I'm not sure if I'm going to put Starbucks in into that category just yet, but I'll tell you what I'm looking at. The weekly chart made a most fantastic technical turnaround. If you looked at this, and I wonder if I can just grab another chart here. Let me just grab this chart here. I don't know what it is. I'm just going to grab this chart. Anyone's looking at in the den, and I just covered up everything. And I said, okay, here's the price of the chart when it was at peak E back in, well, I shouldn't have done that. Now I'm in trouble. When it was back there. How am I ever going to do that? I'll move it there. There it is. So if I said that back at peak E in whatever that was, back in October, November, and now look at the technicals having gone up and come down and then run very sharply. Where would you think the price is? I would probably say, you know what, with the way the MACD and stochastic careen to the downside, I'd probably put the price, if it was when it was back at 43 and it went to a fabulous new high, and now the stochastic and MACD are changing, I would probably have put the price at about in the mid-50s or of kind of the 50-something area. Well, when I take that away, you'll see that the price is only just a tad higher than it was back on the week of the 14th of September. This is what I'm talking about, wheel spin. It means that Starbucks is using a lot of power to try to go higher, but so far it's not. My reading of the weekly and the monthly is that Starbucks is going to be a short. I don't know yet whether it'll be a great short, because I think this is the last thing that people give up when they have to give up anything. So my suspicion is that Starbucks is going to be a short for a move down to the doji candle of the 26th of October towards the 44.27 level. There's a round number 45 low the next week. So that's the area. But to say where it will come from, I have to go to my 120-minute chart and say, if by the end of the day, the Dow is, instead of being up 45 and the S&P up 6, the Dow is down 45 or more, and the S&P is down 6 or more, I suspect Starbucks could very well start its move down now, and that would take it down to the 48.65 level. If you ask, are you looking to short this?
Yeah, I have no position right now. I just...
Okay, I tell you what, we've got a bunch of things that I'm going to do during the break. I'm going to give you a very quick wrap on the answer. I think I'm getting it loud and clear in my mind. I'll give it to you as soon as we get back. Folks, we're on with Mike in New York, looking at Starbucks as a potential short. I'll be right back. Dow minus 15, S&P's down 2.5. We'll be right back at 877.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Dow's down 26. S&P's down almost 4. And we've got a number of callers online. I'm still going to do my lightning round. So let's do this. Mike, this is what I'm suspecting. We're looking at Starbucks. It's in peaks in leg C, probably peak C right now. It's had, I believe it was an earnings surprise to the upside, a fabulous move. Had a very strong move down from the 52 round number high. Interesting, made a 62 round number high in the monthly chart. The last time the daily was 52 round number. Now, this is really important as far as I'm concerned. The low was 44.27, and now it's come back. There's a left side, right side price time match going to this area. I suspect there might be another rally. If this doesn't close above 52, it's closed above 50. No, it hasn't closed above 52 once yet, since it made that 52 round number high. If it fails to close above 52 and starts to slide towards 51.32, goes to 50.55-ish, I would say you could put in a small short position. My preference, because the MACD and stochastic are so strong, is to have the patience to see if it can get to D. Why? Because if the market turns around the next day or so, there's a nice rally, and Starbucks does perform and it goes over 52.30, and it can close in the 52.60 or 70 area, that'll be leg D, but it'll make the stochastic and MACD stronger. I'm going to say hold off. I believe you're going to have a great opportunity to short it, but I'd rather have the evidence in the weekly chart, so because 49.16 is the support. The moment it starts to break 49, I'll be there with you saying, okay, on a short-term basis, you can short and then see where it goes. That monthly is making a potential dreaded H. That's the thing I'm looking at. So I hope that helps you.
Yes, thank you very much.
Thank you very much for calling. Okay, now let's go to our next caller. We've got Johnny. Hi, Johnny. John, how are you?
Good morning, Basil.
Yes, how are you doing?
Good, thank you. Sir, got a question for you on Comcast, CMCSA.
Yeah.
I haven't done the ChapmanWave counts on either the weekly or monthly, but darn it, they must be near leg E's or F's. Anyway.
I'm so upset. My system shut down suddenly the other day because of the storm. It wasn't suddenly. It was very suddenly. And I tried to save everything, and I couldn't. As a result, I'm stuck here because I lost, CMCA, Comcast. I've had on, I don't know how many times I've notated it. This is a potential F/B, and I'm in the camp right now that says there's a really good chance that Comcast could, in fact, be topping out based on the doji candle of the weekly, which is just real quickly an ABC, peak D at this particular point. So
okay, very good.
It's a peak D going to the November 2nd, week of the second high. That's last week. Now, I can tell you this, based on my candle work, this is a very bad close. If it closes anywhere underneath 37.12 in the weekly chart, which at this point at 36.48, I'm not sure how it's going to close above. It's sitting on the 9-period exponential moving average. Are you in the camp that would short it if you looked at a potential short, or you don't short, you only go to long, or you can do anything?
Basil, let me tell you, to be specific, I shorted Comcast stock just this morning at 36.75. I am wondering if this turns into a winner for me, at least according to the ChapmanWave. What sort of downside targets might you be looking for, please?
Let's go step one. Step one is, if at any point in the next 3 to 5 sessions it rallies towards the 37.53 area, 37.53, there's a good chance it's going to try for a double top. At that particular point, I would say you can hold your stop. I would even put it 37.96 was the high. I'd say 38.20 would be a reasonable stop if you're looking at this as an intermediate term position. Now, this is the thing. If it closes below 35.80 in the next 3 sessions, my first target would be on the daily chart, would be the low of the 10th, which is 34.94. If it tries to rally and then fails, it's going to turn the weekly. And the weekly, if the weekly closes by tomorrow afternoon, if the weekly closes underneath 36.20, it's the first time it's closed under the 9-period exponential moving average since it broke out back on the week of the 8th of June of this year. So that would be the first step. The MACD is turning down, the stochastic's turning down, but the weekly is still at 90%, so it's very good. So what you're looking at here, John, is probably the first initial pullback in Comcast, CMCA, which is trading at 36.49, down 9 cents. But there's a lot of work to do to actually get that monthly. The technical's at 94%, and the MACD is still very strong. So it means that the daily has to do all the work. What you want to see is in the next 2 weeks, without going above 37.50, you want to see one day with a pretty darn good gap to the downside that doesn't get filled. Then I'd be in the camp that says, you know what, that not only could that be a potential hat-trick top, but at least I know that the daily and the weekly charts are giving really good, strong sell signals. So I would do this. You got a great short position right now. If it's your initial short position and you're thinking of adding to it, I'd have a little patience to see first if it's going to break about 35.50 to 35.80 on the downside, or if it's going to try to bounce and it's able to break above 37.50. Those are the parameters I'd watch. But I can tell you this, that if it starts to fall from here, if you're looking at some other stocks with very similar charts, Telephone, not quite the same area, of course, but Telephone had a spectacular move to a peak F and has plummeted, and Verizon which is a dividend stock, has gone to a G/D, but it's also got the same sort of thing. So I'm looking at different stocks that have had fabulous moves to the upside. This is one, and all I can say to you is I think you've got a great entrance, but now the stock has to tell you what's going to happen next.
Thanks for sharing those parameters, Basil. I appreciate it, sir.
My pleasure. And that's a really good entry point. Good because it was just under the 9 EMA. Great entry point. Let's go to Mohammed in Glendale, California. Hi, Mohammed. How are you?
Fine. How are you doing, Basil?
I'm doing very well, thank you.
Thanks for taking my call.
My pleasure.
Basil, I was wondering if you could take a look at Toll Brothers. I've been shorting this for a while, and obviously I was on the wrong side.
Oh, you did it at the wrong time, right?
Wrong, yeah. So I've been in around, 31.50 or so. So it's about $1 and change above my price. So I was thinking of covering it. Do you think it's a good time to cover maybe around $32?
Okay, so the last short that you have is at what price?
I shorted it around 31.50.
So you've actually been sitting here for about 2.5 months waiting for it to come down.
Exactly.
So you saw it go all the way. Okay, it's a completely different psychology that we're talking about. Because you sat through an almost 20% going against you, it went to 37.08 peak E in the ChapmanWave. I'm going to suggest a completely different thing. If, in fact, you were holding short and it was just a fairly recent short, I'd say to you, great. Reason being, now it's starting to pull back, and if Toll Brothers, which is trading at 32.63, TOL, cracks 32.50 support of the 5th of November, if it goes under that, there's pretty much nothing there for a while. And that says to me that the spectacular move that it's made in the weekly and the monthly is starting to digest the gains, and that would say that there's a good chance that it's going to go to between 31 and 29 in the next 2-3 weeks. If it cannot, in the next, I'd say within 3 days, if it cannot break decisively above 33.87, I'm going to say if it can't break above 34.20, close above 34.20, there's a good chance that it's just going to digest these huge gains and you're on the right side. But because you've been through the psychology of having it go much higher, now's the time to say, look, Mohammed, if it comes back close to the price that you shorted it at, that's when you're going to make a decision to say, okay, thank goodness I've got my money back. Now you're either going to cover it and say, now I want to rethink the position, a completely fresh position. The little trading god sitting on your shoulders gone now. It's finished. You're done. And now you're going to either reshort it or reassess exactly what's going on. That's number one. Number two is, I think you've got the right position finally. In fact, I thought you were shorting on the right side of the peak E top at 37.08, and I was going to say to you, great, because this is a dreaded H in the ChapmanWave, and it says a close. It's already closed below the 32.30 left side low. So that says any rally should fail, and it should try to retest the most recent low of 32.15. So psychologically, I don't want you to go through the gain. If this thing goes to 30, I'm going to say to you, if it rallies to 33.43, the high of the day today, start thinking about covering. Why? I don't want you to sit through another 15 to 20% loss. It's just psychologically terrible. It stifles your trading. Isn't that so? You were looking at this and you were stopping all your other trades that you would have put on, correct?
Correct.
Yeah, I hate that. Don't do it. So free up your mind. It's at 32.71. Even now, you could say to yourself, wow, it's so close. I could take my money and I could actually put the position on new right now and say, I'll try to trade it to the low of a few days ago. But I don't want you to sit in a losing position of, at this point, it's only 3-5%, something, maybe 6%. But that's different to 20%. I don't want you to do that again. It's not good, but I think you're on the right side of the trade. So I'm saying to you, for your sake, I would not let it go too high from here. Just wouldn't allow it. The other thing is, if it does break down and gets close to your entry price, tighten up your buy stop, even if you get stopped out, and then it goes to 10. I don't care. You're not going to go through that psychological barrier, that terrible thing again. Okay?
Okay. Thank you so much, Basil.
thank you very much for calling, and let me know how you're doing, and I'm going to be following this. You can call again. Maybe we'll look at it again Monday. But thank you so much for calling.
Thank you.
My pleasure. Okay, folks, now let's do this. I'm not sure if it was gold or gold, the stock, or GOLD. So I'm just going to quickly put GOLD here. GOLD has made a peak E-top in the daily, a peak D-top in the monthly, and I'm not sure what this is in the month, in the weekly, and that the weekly is peak D. So Rand Gold has made a new recovery high, and the stochastic is quite good. MACD is quite good. I suspect that at 113.26, I can see that it's gapped down. It might try to fill the gap, but my eye tells me from the weekly chart that GOLD is going to test, it's going to try to test the low of 109.87 that was just made. Then it's going to have a bounce, maybe get to 115.85, the 9-period exponential moving average. Why? Because the MACD could still make an M formation. I can tell you this, that if gold, GOLD, Rand Gold Resources, breaks 108.20, that area, then it's going to test 106.10, which is the 9-period exponential moving average, and I think that's where it's going to go. Now, if you're looking at the GCZ contract, the GCZ contract is acting very well. Now, this is part of, I got a feeling this is part of the European, where gold is suddenly becoming currency of fear again. My eye says that I don't think it's going to go much higher than it's at 1725, up at 11.40 right now. That's very interesting. So now you've got a differential, that's a difference in the euro, the stock market, and gold, where they were often going up together, not percentage-wise, but in the trend, or down together. Now, gold has held, remember the other day I said it's hit the 200-period exponential moving average. That's a great resource if you want to learn tools. That's my 2-day webinar coming up December 6th and 7th. Just check TFNN front page. Let me just double check. I'm going to put this up here for a second. I hope it's right. Let's just see. Nope, not that. Let me try to find it. There we go. Not there, not there, not there. Oh, I'll try to find it, but it gives you the page and everything that you can look at for. There it is. Good. Okay, see, the Master Trader Series just announced level 1, December the 6th and 7th. This is new Master Trader Series. It's a Master Trader Series based on the ChapmanWave, that is. So I'm going to teach it from the beginning, the basics. You get the CD, you get a whole bunch of bonuses. So please check that out on TFNN. Now, what I'm looking at here is that the MACD is turned up from under 20% to over 20%, so 41%. This is the gold contract, December. The stochastic is, the MACD is just now turning positive. So far, this is very good. If it starts to deflect and go lower, that's going to be very important. Let me see if I can get a relationship of the dollar to this. Now, the dollar is in this leg D to the upside. That is where you can get a pullback from the fourth highest peak in the ChapmanWave. So, and I've got my ChapmanWave trend gauge, which says, be careful, because there could be a 6 to even a 9-point rally in the E-minis at any point. Well, in the market, a counter-trend rally based on that particular indicator. So if the dollar pulls back tomorrow, then gold will definitely move a little higher. And this is what I'm looking at. The 9-period moving average held. I think gold is looking... Oh! I didn't see it. Of course I saw it. I'm seeing it now. No matter where gold goes to, if gold breaks 1733 on the upside, it's coming back to test what? It's coming back to test the open. 1715 of yesterday.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, here we go. Lightning round. No more calls. Thank you, Al. We're going to go right into this. So the gold, unless gold becomes a currency of fear, which it's done before, I would say the 1715.80 area is a magnet for now. If it breaks decisively and by Tuesday afternoon to Wednesday morning at noon, if it is in the 1736 or higher area, that shouldn't be a big deal for gold. But if it's in that area or higher, something's going on, and the thing will be a retracement failure with a cup and another little and a handle forming in the weekly chart. I don't see anything negative, but I don't see the actual follow-through to the upside right at this particular moment. I could see it tomorrow or Monday. So right now it is a positive, but the strength in the technical says that it should have broken above by today at noon or tomorrow morning at 11 o'clock. It should be above 1733. So that's the thing. And the magnet that I'm looking at on the long-legged doji, remember the long-legged doji? 1715 to 1716 is the magnet. All right, next thing. CYMI. Now, they evidently had blowout earnings. It's looking very good. This is Cyma Inc., leading laser light system, light source systems. There's a monthly chart has an alternate wave, and so that alternate wave says, and Mr. Bull, thank you very much for pointing that out to me, that the technicals are still pretty darn strong. So this is, I'm calling it leg, favoring F for now, and C as an alternate. It'll change because the weekly chart is G/A. This is going to be a brand new move for the stochastic weight 89. I would not be shorting this because if you've got a short, even if the short works, there's this doji candle at 77.80 and right now it's at 80.75. If you want 3 points, maybe you can get it. But based on my 120-minute chart work and the that I was looking at in the break and also on the price that I'm looking at right now, because the technicals are so strong, a real quick pop-up could happen, and that would be a big negative. I would short it if it starts to pull back under 79 to 78, tries to rally, and by Wednesday afternoon of next week to Thursday morning, it has not gotten above 83.27, somewhere around 83.27, but in fact, it is hanging out around 77.80. I would say then the very next pop-up could be a short. But right now, I don't want to short like the Starbucks. I don't want to actually short the stocks that have the best earnings. I want the stocks that are done. So I hope that helps you. So those are the parameters. I can tell you this, that if it pops up to the 83.90 was the levels on the 6th. If it pops to anywhere in the 85s, this is going to be one of those stocks that's going to be buoyed, but it's going to be like a balloon up with hot air supporting it. So now UWM. UWM is the short position of the, looking at the clock, is the short position of the Russell. Let me just do this. It's much better. I've got it all notated and everything. The Russell is underneath the 200-period exponential moving average. That level of 80.10, it's at 79.88 right now. Even if it slides a little lower, it's going to try to test 80.10. And I can just tell you this, based on the weekly chart, the weekly chart says I've broken uptrend support, my dash line up channel. I am breaking to the downside. If tomorrow, by tomorrow's close, this is anywhere near 78.89, that's just a point lower, the technicals are going to look even worse. And then my monthly chart says this is a very good potential cup and handle breakdown, not a break up pattern. And that says be careful because this can go down quite a bit sharper. Where's the resistance? 81.25. So if you are short the IWM, very good. Oh, I didn't want to run out of, and the SPX and the XLF. Let me just do, I've spoken about the Dow, so use that. The XLF is not acting very well. It got repelled by the 200-period moving average. It's at 1568. Watch out for 1550. If it breaks down, 1545. If it breaks down, that's bad. Stay tuned for Larry Pesavento. Should be a wonderful show with Larry as always. I'll be back tomorrow. Thanks for being here.